Hey, welcome back to the What the Wealthy Do summer series where we revisit some of our favorite episodes and yours too. This is part two of the conversation with Yashnika of being in rooms where, frankly, they didn't mean to let us in. This is part two of one of my favorite conversations, and we're going deeper. We're talking about alternative investments, where the real wealth is built, and who actually qualifies to get in. Spoiler alert, you might already qualify, but nobody told you yet. I'm glad you're here because we're kicking down the gates and showing you what's possible. Let's get into it. Can you tell us a little bit about what you're doing there?
Yeah, so
Is it
I'm
still in the due diligence space or is it a little different?
no, so I'm client facing at the time now. So last year I was able to get my licenses. I got my Series 7, I got my Series 63. I now support my senior partners who cover the large RIAs or registered investment advisors,
Yep.
as IBDs or independent broker dealers. Just for those who may
Well,
not.
thank you for like translating because
Yeah, it's
yeah.
necessary. Acronyms. Sometimes we think acronyms is like universals. It's like, no, girl, just
Right.
like just for you. So we cover the middle of the country, and so I
Okay.
support them. They're client facing. They're constantly meeting with LPs, the limited partners,
Yep.
investors who are now stakeholders in the solution portfolio solutions that we offer, as
Yep.
well as prospects, those who are looking to be LPs in the future, now or in the future. And we are, our primary goal is to educate those on alternatives, those who are not familiar with alternatives or are new to alternatives, educate them on our platform and how we can partner for the best of both worlds. And that's pretty much our mission every day.
It's really interesting that education is super important, not only for individual retail investors who have obviously no experience in I shouldn't say obviously who probably don't have experience investing in alternatives, but it sounds like there's a ton of education that has to happen with people who are in the financial industry who work as financial advisors or registered investment advisors.
Yeah, so the interesting thing about alternative investments, as as simplified as we've made it this nowadays, for a long time it was considered to be extremely complicated. Like I think it proliferated in the 1990s, and so alternatives was seen as like this scary monster that only was accessible to institutions because they had the large amount of assets that they can allocate to. They had different tax implications, they had different access points.
Yep.
So for the retail investors, when we talk about financial advisors, or we're talking about CIOs or family offices or investment analysts at RIAs, it was just not something that most people actually participated in. It was something that was considered, was complicated when it comes to sub-document process. We talk about semi-liquid perpetual products, which are just now,
Yep.
becoming a hot topic, if you will, for a long time. A
Yep.
lot of alternative assets, a lot alternative funds had like they were drawdown funds. So you had like these long lockup
Yeah.
periods that
Yep.
you had to lock up your capital for a certain amount of time. You can't get it out. You can't touch it. They were expensive. Um, he had a J curve, so you really didn't see any returns, or you saw a negative return on your money for a certain amount of time before you could see any positive. It was like all these type of not very attractive attributes of alternatives, and so a lot of people stayed away from it, whether you were in
Yeah.
finance or not. A lot of people just stayed away from it. I think now is the time where it's like, no, we recognize that most people don't require daily liquidity. Most people have their money in checking accounts and saving accounts and money markets, and they don't touch it for months, if not years.
Or
And then when you,
401ks.
yeah, exactly. You're
Right.
storing money up for 20, 30 years and you're not generating your highest returns that you should be. Why? You know what
Yeah.
I mean? Because of fear or lack of understanding. So I think
Yeah.
now is the time when we think about like inflation and getting a real return. We're like, I remember my mom was like, I used to fear for you when I thought that cereal was going to be $5 by the time you had children. Well, I don't have children, and I just bought a box of Cheerios for $9 the other day. Okay, what I mean, you see what I'm saying? So, we're talking about the wealth that we need when I get old. I want to be able to live decently when I get old.
Can I
Well,
have Cheerios? I just want to
I,
have some Cheerios.
I You know, and with some strawberries every now and then, that literally strawberries will probably be like $72 for a pint by the time I get, you know what I mean? By the time I hit retirement. So when we talk about capital needs in the future, retirement services, like the conversation of alternatives needs to be had because that's really where risk adjusted returns are really showing up. We've seen in the last couple of years the destruction of the 60/40 portfolio that was primarily in public markets. You know what I mean? A lot of people had no allocations, if not very little allocations to alternatives. And portfolios have been completely left in shambles. We got 70-year-olds working at the
Walmart.
retail market. Yeah, because it's like they need capital, they need money. You know what I mean? And so it's like, girl, we need to do something about this. And the education is the key. We say, I believe the children are the future. Well, let's start. You know what I mean? Let's start with the re-education of money. And that's, I think, another issue that we don't talk about is a lack of education of money from a young age. Like
Yeah.
I was telling my friend my best friend, I was like, I've learned to have a doctor since I was young. Most people learn to
Right.
have a primary care doctor when they're young. No
Yeah.
one ever told me to get a financial advisor when I was young.
Yeah.
You know, I mean, to have the conversations about financial language, to
Yeah.
understand it, to feel comfortable around it, to have quarterly check-ins or semi-annual check-ins with a financial advisor is the same as you do as a yearly regular with a doctor. That should be had in our community across the board, not just in our community, but in everybody's community, because financial wellness is a very necessary it's another necessary part of adulthood, even going into adulthood. When we talk about 529 plans and how to save up for college, trust, and yada yada yada, there's a large segment of information that I think a lot of people don't get to at all. If they do get to it, they get to it late. And we know that the most valuable, the most important variable in any investment formula is time. Like
Yes.
returns is the most important form. It doesn't matter if you're generating 20%. If you only generated 20% for 1 year, great. You know what I mean? But you want to
Right.
have that year after year after year.
Yes.
So I think alternative education is really paramount to anything that we do now and in the future, and it's critical that we do it on a big scale. You know what I
Yeah.
mean? That's why I'm so grateful to be a part of the institution that I'm in now, because we really operate like a think tank. And so I came in
Mhm.
with a very limited understanding of capital markets, a very limited understanding of alternatives. I came in, I'm essentially, I would like to say that the way I see it is that I'm someone that would benefit a lot from what you're trying to do. Like I'm the benefactor of your mission statement and your objectives. Like I don't, I have a coin or two, but I don't know anything. I don't know how to do it. Yeah, I don't know what I'm
Right.
doing. I didn't know how to do it. And so I come to Apollo and now I'm like, okay, I'm understanding of it. I'm feeling more comfortable with it. Now, how do I utilize everything that I'm learning and
Yeah.
benefit the community, and share what I'm learning with the community? So I think that's where I am now. And I'm hoping that, we're able to do some good with what we have,
Yeah.
in the positions that we're in.
If you're at a place where you're like, okay, girl, I got all this information and I still don't know where to get started, you should look into joining me and some amazing women in the Sovereign Collective, where we are collectively working together to support each other on our own independent wealth journeys. You can look us up at joinsovereign.co, where we are holding each other accountable and supporting each other as we build the investment portfolios of our dreams. Yeah. Yes. I mean, because even I would imagine being at Apollo and seeing because Apollo is very successful, and seeing the amount of capital that's moving, are you as a retail investor available to participate in an Apollo type fund? Like, do you meet their standard of net worth
Well,
to be able to participate individually?
so I think for me, understand. So outside of being anything specific to Apollo product
Right.
and specifically, I
Yeah.
think for me, I've learned like the import of understanding suitability for any type of investment, particularly with
Ah.
alternatives. So when we talk about and I view it in multiple ways, right? So
Okay.
most people in the financial industry will view suitability as like a numerical value, like whether
Yeah.
you're accredited, QP or subaccredited, or I should say subaccredited, accredited, or QP. And that just essentially is a numerator.
Sub-accredited? Oh, that's not accredited. Is that what
Yes,
sub-accredited
yes.
means? Okay. All right.
So if you have $1 million or more in net asset value minus your, as you know, and minus your primary residence, you're
Yep. Yep.
accredited. If you fall below that, you're sub-accredited. If you have
Yep.
$5 million or more minus your primary residence, there's some other qualifications. It's all in, you can look it up. It's public information, and you will
Yes.
qualify for it. But I think there's more to that, right? When we talk about suitability, when I think about myself and my investment path and career, and how I want it to look, and I think there's a component of, like, as we said before, as we talked about between you and I, there's a psychological and emotional component to money that also plays a part in suitability,
Yeah.
right? We talk about
Yeah.
risk aversity versus risk
Yeah.
taking, and we know that some of us have had severe traumas related to money in the past. So you could be sitting on $20 million, but if you're afraid that someone's going to take it, right?
Girl.
Going to somebody and saying,
My
here's
God.
$20 million, please
Yes.
invest me, knowing that they cannot guarantee you returns, that's a lot. That's a lot to
That's a
do.
lot. It's
That's
a
a lot.
lot.
And a
Yes.
lot of us has had severe traumas, or we've had to take care of family members. You know what I mean? We've been the only person with a checking account before.
Yeah.
We made, some of us are immigrants and came from countries where all of our assets were seized before we got here. We worked really hard for 20 years and then we didn't have nothing. We've been
Yeah.
here. All of our
Yeah.
assets been seized for nothing. So
Mm.
there's a story behind everybody's relationship with money that I think plays a part in suitability outside of just how much you have.
Yeah.
When it comes to me, I'm still trying to understand my suitability because I'm fairly risk averse. I will say that, but that's because of my upbringing, right?
Right.
I have family members who, I had a grandma who always went, like, online baking, not gonna happen. You know what I mean? She wants to go to the check cashing place and get her money in cash so she can
Right now. So
count
chicken.
it.
Yep.
Okay. So she can count it on the spot. She's gonna keep it with her every time she has it with her. Okay.
Yep.
She's not letting it go. I know people who are afraid to transfer money on an app because they're like, I don't know who's gonna steal my identity. I don't know who's gonna. So there's
Mm.
this suspicion around the
Yeah.
financial markets, particularly now since so much of it has been digitized,
Yeah.
that we don't talk about. We don't talk about people's personal relationships with money. So I think it goes outside of just a numerical value. And for me
Yeah.
to say, like, oh, I fit this criteria and I can invest
Right.
there and I can invest there. It's like, am I comfortable? Do I understand the risks involved as well? Right? Because investing means that there's no guarantee. You know
Yeah.
what I mean? There's no guarantee. I think there's a comfort in knowing that, at least certain your accounts are insured. FDIC
Yeah.
did a job. There was one positive that came out of the Great Recession or the
Yeah.
Great Depression. But there's no guarantee in investing, and then you have to talk about finding a financial advisor that you trust and you can have a relationship with. Well, as we
Right.
talked about earlier, there's not a lot of us in the community who are financial advisors. So you
No.
have to go outside the community and find a financial advisor that you trust. So there's a
Which is
lot.
another thing to overcome. Yeah.
Yeah, in
Yeah.
terms
Yeah.
of determining, in my view, suitability, you know what I mean, a
Yeah.
particular solution, understanding downside protection, understanding volatility. That's where I am now. I'm really asking myself the hard questions, as terms of how do I want my portfolio to look like? I'm young, and so if most people who invest in a 401k, the 401k probably has a model allocation based off of your age
Agent. Yep.
that kind of allocates for you. Well, that's a good place to start, right? Just try to understand that. Why do you have more stocks than bonds, or more bonds
Mhm.
than stocks, or whatever? That's a good place to start, I think, just to understand that. Because a lot of people,
Yes.
you'd be surprised, don't even understand it. They just let their money go into the fund and call it a day.
Yeah.
But I think that there's a lot of value in being able to be comfortable around money, be comfortable in understanding money, not just as a piece of paper that isn't backed by gold. You know what I
Right, because
mean?
it's backed up by our promise.
You know what I mean? Yeah, to understand really how wealth generation happens and wealth creation happens and how our companies finance. If you wanted to be an entrepreneur, how you gonna finance it? How equity versus debt, and understanding, hybrid models and even options and futures and derivatives, and if you want to go into hedge funds and what the risks are there versus venture capital and angel investing, it's a whole ecosystem to learn, but you just got to find where you're comfortable where are you comfortable? I think that's the question.
But
All
anyway,
right.
the you just got so many bars, and I know you have a hard stop. So oh my God, Yashnika.
Anytime. I think these are important. And anytime you need my help with anything, anytime you want to ask me a question, I'm always available. I really appreciate what you're trying to do. I appreciate meeting you at the Black Women's Asset Management Conference. I'm hoping that we get to meet again in a lot of those events. And I wish you all the success and best of luck in everything you're trying to do.
So now you know what's possible. The question is, what are you going to do about it? Are you going to take the leap? Let me know what resonated with you in the comments. And don't forget to like, follow, and subscribe wherever you get your podcast. We are on Apple, Spotify, and YouTube. And don't forget to share it with a friend. All right, we'll see you next week.